Hey traders, Raghee here. This might be the only time ever me and Jerome share the screen, but all this week is about, well, is it that way? Yeah, that man right there. And that's going to be a big part of what we talk about today in the show. Welcome to the Raghee Report. I am Raghee, and this is my report. We've got talk about a big week coming up. We can talk a lot about what's happening with the banks, although if I recall seeing I don't know if it was a tweet or what it was, but there was a really interesting tweet. Again, I don't know if it's true, but sounds interesting, that they monitor private planes flying into Omaha. And apparently 20 plus private jets landed in Omaha from, well, what we would perceive to be either headquarters or regional banks, DC, and the ski slopes. Now, whether that's true or not, I don't know, but I thought it was very interesting. I would keep an ear out for anything that that Grandpa Powell might be doing. I could have easily had a picture of Grandpa Buffett here too, because this is exactly the kind of event that he is able to capitalize on like no one else. He is the GOAT of investing for a reason. Not trading, right? I still believe it's Stan Druckenmiller, but when it comes to investing, hard to argue with his timing and prowess. So we have those two things coming up this week. Are we going to hear anything about Buffett, Berkshire, and these regional banks? And what is it that Jerome Powell is going to bring on Wednesday? Now, let's take a look at this economic calendar before we get too ahead of ourselves. This is the trading economics calendar. And this is something, whether it's this or whether it's Forex Factory, pick whichever you'd like, as long as you are looking at one of these. Really important. Let me get there we go. Shrink me down there. As long as we're looking at one of these and we're aware of what's coming. Now today, look, are we caring about much else other than I would pay attention to Lagarde or the aftermath of the Lagarde event at 4:45 a.m. Eastern on Wednesday. But the big story is going to be, what is it that the FOMC, there's actually three big central banks in play, none bigger than FOMC when it comes to U.S. markets. FOMC economic projections, the statement, the presser. Gang, the presser on 2:30 on Wednesday, either grab some Dramamine or pop some popcorn, kick your feet up, and wait for the aftermath of that presser. Because there is, and by the way, I won't rehash this because those of you that are listening, check out where is it? Over at the Simpler Trading YouTube channel, we have a video that I did on Friday, trick or treat. And I meant that quite sincerely. What is it that Powell's going to bring us when we get to Wednesday? Is it going to be, hey, Fed fund futures are in line with what we're doing, this most dovish type of discounting that we see, where we've swung from nearly 6% down to about just below 5% on expectations for that peak rate, 1 full percentage point swing. Check this video out. I completely explain what it is that I'm measuring. Data-driven, gang. Not gut, not what I think. It's what we see and what can we track. If you want to know, I always hear about these Fed fund futures and what that means. How do I measure that, Rog? Do I have to be a futures trader? You absolutely do not. So check that out. And I walk through that in a lot of detail as far as what we're expecting. Then I get into which sectors could be very, very interesting bullishly and bearishly. So remember, we need a bullish watch list. We need a bearish watch list. We need things, if the Federal Reserve wants to course correct us more towards 5 or 5.25%, more hawkish than where we sit, or less hawkish or equally hawkish as where the Fed fund futures sit. That's going to be really the big play. And this may not have been as big a deal if not for obviously the regional banks, but I won't blame that alone. This will be far more interesting when it comes to the repercussions of what our Fed fund futures discount is communicating to Powell and then on Wednesday, what he's going to communicate back to us. The other really interesting hot zone, because I mentioned there's 3 major central banks in play. Please don't underestimate the importance of Lagarde, even though I'd say she's going to come in third in terms of importance. The other one is a central bank that normally I don't pay any attention to. We typically don't hear a lot of chatter about it, but frankly, with Credit Suisse and what the Swiss National Bank is doing to sort of shore that narrative, shore them up, this is going to be a pretty interesting one on Thursday morning. So if Powell comes out on Wednesday, we get our hawkish, not hawkish, more hawkish, less hawkish understanding, and Fed fund futures will align accordingly. But on Thursday morning, the SNB in the press conference, and does this calm the fears of what's happening with Credit Suisse? That's going to be a big one. Normally, would not even be concerned with Swiss National Bank. This week, we got to keep an eye on that. So we're going to have a really interesting discussion at the end of this week. And on Friday, I will have for those of you, well, I'll have more information on that probably on Thursday for you all. But I will be working on a write-up for members about what it is that I've got my eye on and why, and how you can measure it from a rate of change standpoint, or how you can measure it with an understanding of trends, an understanding of the 200 exponential, and a lot of other things that we can use to better see where we stand at the end of this week. All right. So with that being said, as always, if you have any questions, please don't hesitate to ask. Let's go ahead and jump into some charts. Let's stick with the trading view charts here. I don't use them nearly enough. Of course, now we've rolled over into June. That's the M contract. So obviously we rolled over into the next front month, and we're looking at June. And what we have as the markets are opening, this is a very, very early look at Asia and at the markets opening. We have as I would probably suspect, I'm sure a lot of you suspected as well, nice little inside candle, although it is lower, as you can see here, it is lower than the high, but it's above the close. Now, why is this an inside candle? Let's address this techno babble here. What is an inside candle? An inside candle is also known as a harami. And when I have an inside candle, what that's telling me is the market's waiting on something. It's below the high of the previous session, and it's above the low of the previous session. So that's what we're looking at in here. Inside candle, also known as a harami. All right. Not that I'm a Japanese candlestick fan or anything like that, but that's just what it's called, another common term for an inside candle or inside day. All right. Okay, so that's where we sit, above the highs, above the close, above the lows of Friday. So not quite the same degree of panic, but clearly below the high and the open of Friday's session. So this is definitely a wait and see candle. It's not a panic candle. It's not a sigh of relief candle either. Important to keep an eye on a few things as we go into Monday. All right. The high right here, big deal. Big deal. Can we get above the previous session high? A lot of opinions will shift. It'll be bullish if we get through there. If we break the low of Friday, again, a lot of opinions, and not just opinions. Think about what's going to be parked right here. A lot of times you'll have a number of orders, whether they be buy stops or sell limits, right? Whoever wins at this level is going to own the next burst of momentum. The same thing goes here. We'll have a number of sell stops, right? So when that price trades, what oftentimes will happen is we'll see momentum as we break through that low. That's why these two levels are so darn important. It's not high level fancy indicators, gang. Sometimes just looking at these prices will tell us a lot about tripwires for more momentum in the direction. Okay. All right. So with that being said, let's also take a look at bonds. So there's 3 big markets we can take a look at for a quick sort of take on where we are from Treasury perspective, from the US dollar perspective, and from just the broader averages using the S&P. This is the ZB. This is the bond market. Also another inside candle. So no major moves on rates. Now remember, right now, moves higher in ZB, the long bond futures, in TLT, that's the ETF alternative. Moves higher have been fear, have been a flight to safety, right? Moves lower have been a little bit more the unwinding of that concern. So we definitely need to see a nice pause, which we're seeing for now. I mean, it's very early, obviously. So a nice little pause, and clearly we're waiting on something. Everyone can look at the hot zones of the calendar this week and see Lagarde and Powell and the Swiss National Bank in play. So this is something we want to watch really closely. Those are hot zones, right? Scheduled, high volume, high volatility events that we know are coming, and we can discount accordingly. All right. So then the next thing that we want to take a look at, the last thing we'll take a look at, is the 6E. So the three markets we can look at are the S&P 500 futures, the long bond, the 30-year futures, and the euro. Well, why the euro? Well, the euro gives us a 24-hour look at the number one weighted currency within the US dollar basket. Remember, it's a basket, and the majority of that basket is the euro. Second is the yen. Third is the pound. We have some fairy dusting of three other currencies that frankly don't really move the needle all that much. But again, euro, yen, and pound, those are your big three. So if the euro is moving higher, that is weakness in the dollar. It's an inverse or negative correlation. And you can see this candle here, right there, sitting just below, right there, just below the close. That's actually a pretty good candle right there if you are looking for higher highs in the euro and lower lows in the dollar. All right, so those are the three markets that allow us to take a nice swift look across what's happening in the markets, right? Treasuries, currencies, indices. All right, so let's get to our questions as always. All right, let's get to it. First up, hey there, Mark. How are you? Barron says tech has become defensive. Sure. Far be it for me to argue with Barron's. And play a net XLK neutral with a slow stochastic pointing up. All right, so what's the deal with tech? So there's a lot being made of whether we're looking at tech with XLK. Love it that you're looking at the sector with Apple and Microsoft in it, Mark. Absolutely. So let's talk about why does it seem that with all the fear, all the melee, all the hyperbole around this regional bank issue, that perhaps there is a certain degree of contagion. Again, contagion is only a problem if it's not contained, right? So we know contagion necessarily, it's going to be this domino effect. But if it's contained quickly, it's not a problem. If left unchecked, right? What are we thinking? Oh, it's another Lehman. Let's cool it on the 08. I know we love to play that. We love to play that in our minds. I guess we tend to sort of, what's the word? Rehearse catastrophe, practice catastrophe, rehearse disaster. I get it, right? Fear, of course. But let's be a little bit more practical. Why is it that the NASDAQ via NQ or QQQ seems to sort of be slightly immune to all this? It's a really easy example. It's a really easy bot's giving me, but I don't think that's right. Catastrophize? You're making up words now, bot. Catastrophize? There we go. Catastrophize. There we go. All right. Why is it that this is an exception, right? I'm going to show you, right? Show me, Rog. Don't tell me. Let's talk about it right now. Okay, so we're going to head on over to one of my favorite free sites, and it's ETF DB. Let's type in the QQQ. You can do this at home if you're playing along. ETFDB.com. We're going to take a look at the QQQ. What's the QQQ, gang? Well, if any of you here are part of the Sector Secrets Mastery, you know what this is. For those of you that don't know, this is the NQ, right? It's the NQ futures. Click on holdings, all right? Click on holdings, really easy. And here we go. Microsoft, Apple, Amazon, Nvidia, Google, Meta, Tesla, right? All right, that's interesting. Okay, Rob, I knew what the holdings were, but let's take a look at the holdings analysis. Tech, consumer durables. Well, actually, let's go this way. I went the wrong way. Tech, more tech, retail, health, consumer services. But take a look at 70%. Heck, take a look at 62% of the QQQ. It's tech. Finance is less than 1%. It's a 0.5%. Health is 6.25%. What is going to move the tech market? Tech, right? The weighting of financials is completely irrelevant in terms of the impact. And even health is pretty far down there, 6% as opposed to 62%. Do you think that financials are impacting the NASDAQ? What about XLK? And this is where, if we dig into why is XLK seemingly immune to this, it's exactly this. Let's do the same thing on XLK. 49%, almost 50% electric. What does that mean? Electronic technology. I don't even know what that means. All I know is it says technology services, commercial services. Where's the finance here? 0.76. Do you think that matters? Doesn't even matter. So why is tech immune, it's seemingly, to this? It's simply not weighted. So if the Qs, NQ or QQQ, move lower, it's basically just panic. It's fear that's widespread. Well, the fact that the Qs are not melting down tells me that the panic button isn't everywhere. Panic should be everywhere. If we're really in that panic, it should be everywhere, right? Because people are going to say, Rog, I don't care about the weighting of tech, regional banks, KRE, the big 4 plus, XLF. I don't care. This market's melting down. Get me out of everything. We're not seeing that, are we? And that is one of the things that I think gives us a glimmer of hope that people are still thinking. They're not in rehearsing disaster mode. And I hope that makes sense, right? I hope that makes sense. The weighting will tell us. So rather than just simply operating with, oh my gosh, the markets are melting down, which markets are melting down? Rightfully so, we see the weakness in KRE. And even from a contagion perspective, XLF. Again, keep an eye on that Swiss National Bank. That's going to be a big one. All right. Okay, so let's get, as far as getting long, right? Now, this is the second part. Now we know what these things are made up of, right? We're not having to guess and prognosticate about anything. We know why XLK is really kind of immune to what's happening. It's simply not weighted, and we're not seeing widespread, get me out of everything, right? This is XLK on the 1 hour. So this is what I would tell most. This is what I'm going to do, right? So this is how I'm going to play it. And then you see what works for you. Between now and Wednesday, I think to a lot of people's thinking, and I think I just saw it, Jack just mentioned, hey, do you think we're going to be mostly sideways? Jack, I think we're going to be range bound, right? We're probably going to find some ranges, inside candles, maybe poke our heads up here or there, test the waters, maybe some stops or run to one direction or the other. But for the most part, I'm with you. I think there's going to be a lot of sort of guillotine syndrome. Who wants to stick their neck out in front of whatever it is Powell's going to say in terms of aligning our expectation for where the Federal Reserve is really going to take rates? Yeah. So I agree with you there. Yeah, I totally agree. So then the next thing is what time frame should we take advantage of? Well, let's jump on over and look at the 1 hour. The 1 hour is going to give us a beautiful 1 day, 2 day, 3 day, maybe same day type of follow through that's realistic in terms of expectations. In other words, let's find something that we can not necessarily day trade, maybe take something overnight, maybe take a trend following mean reversion to a swing high, maybe take a daily price movement range to the halfway point, maybe to the opposite end of the range. So we can have a very nimble, shorter term window in our short-term swing trades, our short-term overnight positions. I think the 1 hour is going to really be the key to this. So 2 things, gang, if I can give you a little bit of homework, if you're up for it, 2 very quick little videos. Let's head on back over to the YouTube. All right, so 2 videos that I would say, if you want to spend a couple more minutes understanding the background on all this, that I would recommend. One is, of course, the trick or treat video. This is, Powell. What's he handing out? Trick or treat. What is it? And the other one is this 1 to 3 days. How can you find these videos? Head on over to the Simpler Trading YouTube channel. Go to videos, and then you'll see me in my blue shirt. All right. So check those out. Leave some comments, leave some questions, put some requests in. I'm happy to take a look. I look at every one of those comments. So, all right. So Mark, great way to kick off the show. Thank you. Hey there, Todd. Todd, I'll tell you what, I'm here doing this anyways, right? Sometimes my cat's here with me, but he wants no part of this. He said he'll come back after Powell on Wednesday. So this is what I'm doing on a Sunday. On a Sunday, I'm looking at my notes and my trades in the prior week. I'm thinking about the time frames. I'm thinking about the hot zones to be able to navigate what's coming up. And this is what. Hey there, James. Yeah, this is what we're going to focus on. Can we stay short term? Maybe day trade, first hour of the day, get flat, and then maybe look at some 1 hour time frames with the idea that we can be flat before Powell. Okay, remember 2 big hot zones this week, really, from a central bank perspective: FOMC on Wednesday and the Swiss National Bank, the SNB, on Thursday. All right, next up, Ab asks, for my Friday video, looking at XLK and Apple and Microsoft. Yes, it seems NQ could be bullish and taking the next leg up. Would I agree? Tell you what, if Powell on Wednesday basically reiterates what we are seeing on the Fed Fund futures, okay? Fed Fund futures are a futures contract that speculate, just like we have bond futures and notes futures and so forth, the 5-year, the 10-year, the 20 to 30-year, just like we have speculation on what yields are going to do, we have a contract that speculates on where the Federal Reserve is going to take the target rate probability, or the target rate, right? Hence, we have our probabilities. I love geeking out on this. And I love geeking out on this because you can see what I'm seeing. We can track the rate of change together. And the whole thing is going to be, have we overdone the reaction to the regional bank crisis? Because when Powell spoke on day 1 of Humphrey Hawkins on, what was it, the 7th, March 7th, we were up around 6%, 600 basis points. Right? That's where we were. Look at where we are now. 450 to 475. That's 4.5 to 4.75 points. In July, there's actually possibly a cut. This is very much a less hawkish picture than what we saw the Federal Reserve set us up for before what happened, basically not even 72 hours later after he spoke on Capitol Hill during his 2-day testimony. We might have overdone it. And if somebody were to ask me, Rog, what does history tell you? History tells me we overdid it, because the Federal Reserve has been kind of operating in an average, in a mean of about 5%. So we're a little bit below that. The other part is, are we getting way too aggressive about how soon the Federal Reserve will cut? So the threat here really is to the downside. Yes, the Federal Reserve might keep this here. They may not talk too hawkishly. They may sound like we have adjusted Fed Fund futures target rate probabilities. My guess is no. My guess is we've overdone it. It's a guess. It's a guess based on the fact that for the most part, we've been operating around 5%. So it's hard to say just be blanket bullish, but if I'm going to be bullish anywhere, semiconductors, XLK, some corners of XLY, and the NASDAQ. So yes, mostly in tech, I agree. But please remember, if we don't look like this after 2:30 or after 3 o'clock Wednesday afternoon Eastern time, let's keep in mind we could see a pullback. I don't want to position for the long side, assuming that Jerome doesn't upend all of this. Like I said, gang, I didn't want this video to be cutesy. I was being quite literal. Trick or treat. We do not know, and I give you a potential kind of scenario for both. All right, I just pushed that video through in the chat there. All right. So let's see what else we have here. So thank you for the question, Ab. I appreciate that. And Jack, I agree. I agree with your assessment. Absolutely. All right. Hey there, Jet Jockey. How are you? How are you, my friend? Do I see a possible play on gold? All right, let's go back to TradingView here. DC futures. Do I see a possible play on gold? 1 hour time frame. It would have to be the 1 hour, my friend. We'd have to take a look at what kind of setups we're seeing. We want to stay nimble. We want to remember that gold absolutely went parabolic. And where did it go parabolic from, gang? Let me show you here, because I think so often we want to prognosticate, when in reality, a lot of times, if we trust our tools and we trust the trends, we'll be fine. Gold was in an uptrend, so there's no reason to do anything but look for pullback buys or to get an oversold buy to get long. 2 hits at the 200. That's set up at the end of February. That's set up at the end of March. And that's pretty much what we've been launching off of. Now, we get the KRE narrative, which sends bonds higher, which sends the real interest rate, the real yields or real interest rate lower. In other words, the chasm between the nominal yield of a bond and the rate of inflation, which is known as the real yield or the real interest rate, contracted. That allows gold to expand. That allows gold to move higher. And that's exactly what we've seen here. As bond yields have rallied, basically, the long bond, ZB, is moving with GC. We need a pullback, though. This is a very, this is absolutely a slingshot of a move. And I don't want to risk being long at, sort of the highs of these ranges. Again, 1 hours are going to give us a much better ability to catch some of these moves, whether we're going to play the wave, whether we're going to play the DPMRs. There's a lot we can do when we look at what's happening. Let me show you this on TOS. So there's the daily on the right side, and there's the 1 hour. And it's a 1 hour on the left. So all I'm looking for is either a mean reversion, or a DPMR buy. All right, that's all I'm looking for. If the DPMRs get sandwich up like this, that's higher than usual volatility. That's a warning. That's a warning. So that's what you know just how parabolic, just how really overdone gold has been from time to time. Lots of volatility into the upside. So I do like the buy, but probably the 1 hour is going to put us in the best position. Okay. Mark asked, do I have a preferred news source, or do I ignore the news and just trade the price action on the charts? I do ignore the news, right? I do try to ignore the news. I keep CNBC oftentimes up here in my office, but on closed captioning. I actually find myself leaving closed captioning up a lot anymore, even when the sound is on, except for when I'm watching F1. All I want to hear is those engines. So when we have news, sure. Remember, news doesn't always mean we're getting the first go round, the first reaction of whatever that may be, unless it's a data release. I try to ignore the news, except for when we get data releases, in which case I know the volatility could be useful. And you're right. I want to trade what I see on the charts. It's not just price action, though, Mark. It'll be volume action. It'll be volatility action. There'll be time of day. And, of course, price. As long as I keep an eye on volume, volatility, price, and time, I'm looking at all 4 factors of the market. Those are the things that I measure. And I believe when we put those together, we're getting a complete view, as opposed to just indicators, which are based on open, high, low, close, and price, which is open, high, low, close. That's a good look at the market, but it's one-dimensional. If we want a 4D look, if we want a 4-dimensional look at the market, we add time, we add volume, we add volatility. So I'm very wary of news. I'm definitely not going to listen to talking heads on television, but I know they can move the market, right? You have a certain hedge fund manager, you have certain analysts. They carry enough sometimes influence to move the market. There are the Kardashians of finance out there, right? They can move markets. Okay. With that being said, gang, thank you as always for being a part of our Sunday look at the market together. I'll be with you for the Raghee report. I'm sorry, no, tonight was a Raghee report. I'll be with you for Charts and Coffee tomorrow at 9. All right. So as always, gang, thanks so much. If you have any questions, if you have any comments, if you're catching this on replay, thank you. Leave your questions, leave your comments, maybe some symbols you want to take a look at, maybe a good book you've read. Let me know, and I'll see you all tomorrow, 9 a.m. Eastern, right here at the Simpler Trading YouTube channel. Check out those 2 videos that I mentioned, 1 to 3 days and Trick or Treat, also at the Simpler Trading YouTube channel. All right, gang, be good to each other. I will see you tomorrow.